The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, ladies and gentlemen. Welcome to today's webinar on volatile sanction regulations and the need for a transformational approach to screening. My name is Jochen Biedermann, and I'm the moderator of this webinar. In today's fast-moving landscape of sanction regulation, it has become increasingly crucial for financial institutions to stay ahead of the curve and to adopt a more responsive approach to ensure compliance. Today's webinar aims to shed light on the challenges of volatile sanctions regulations and also to explore the details of a proactive and agile compliance framework. First of all, please allow me to introduce my fellow panelists. We have Tame, the Global Director for Partners and Content Integration at Dow Jones. Then there's Mark Rakimilovic. He's the Senior Director for Blockchain Product Management at Oracle. And last but not least, Deya Innab, the Deputy CEO of Eastnets. Many thanks to all three for joining our discussion. For the broader audience, please use the question box to ask your questions, which we will answer a little later. I hope you can find the box somewhere on the screen. Otherwise, please use the chat to ask how to raise your questions. Alex, let me start with you. Maybe you can share with us some thoughts on the risk posed by the current geopolitical situation, and in particular, what is the impact on sanction regulations, both maybe qualitatively and quantitatively?
Absolutely. Thanks, Jochen. Hi, everyone. Thanks for joining today. So I'm not a regulatory expert, as you can tell from my job title, but I work for Dow Jones Risk and Compliance, and we provide risk and regulatory data for the financial and corporate markets to help mitigate risk and comply with regulations. We cover subjects like anti-money laundering, payment and transaction screening, and third-party risk. We offer a large set of sanctions and other official lists, PEPs, and adverse medias, and we specialize in what we call sanctions control and ownership, which deals with entities targeted by the OFAC, EU and UK 50% rules, which focus on non-directly sanctioned entities which are owned by sanctioned parties. So we have over 450 researchers around the world based in 6 locations who are just constantly working on adding to and keeping our database current. So that's our focus and the angle from which we're approaching this. So we have a good relationship with a number of the regulators around the world. I have a couple of slides today. There's not going to be death by PowerPoint, I promise, but I think these really go a long way to illustrate some of the answer to your questions around quantitative and qualitative changes in the sanctions landscape. So if you look here, you can see in light blue, we've got the changes to OFAC, EU, HMT, and UN lists, who are the 4 biggest regulators. The changes in light blue, the removals in the grey thin slivers you see, and additions in the dark blue there. And so January to December 2020, around 5,000, 2021, around 5,000. And then 2022, with the start of the Ukraine war, you see that number spike like massively to north of 13,000. And now we're Jan to June this year, we're already nearly at 5,000. So it'll probably double the number of changes that we've seen. And so it's no surprise to everyone that the Ukraine war has really sort of triggered a massive growth in the number of additions and changes and updates to that market. But we're also seeing new regulatory programs. We're seeing new lists, new ways of using lists being applied all the time. And that underlines a change in the usage pattern. We're starting to really see them being used as an instrument of foreign policy, which highlights some of the changes that we're seeing in China, sort of new sanction regimes, and indeed the counter-sanctioning that we're seeing from Russia of Western politicians who've been involved in sanctioning Russian oligarchs and entities. So this tit for tat piece sees foreign policy is becoming a real factor here. And we don't think that's going to change. We think that's going to continue to happen. And so the impact on businesses going forward is going to be more of this. We think more regulation, more nuanced and complex regulation, and more of it. And if we flip to the next slide, it's similar data, but broken down on a month-by-month basis. And you can see that that tracks prior to that spike in March 2022, fairly low monthly updates, and then post that, really significant increases. So going forward, I think with the combination of factors, the Ukraine war, the tensions that we have with China at the moment, and this increasing preparedness to use sanctions as an instrument of foreign policy, we're going to continue to see more changes happening more often. So it really ramps up the task that we have to keep our lists current.
Thank you very much, Alex. And maybe we involve the audience. Having Alex's comment in mind, let me ask you, the audience, whether rapid regulation poses a real challenge for compliance for your institution. Do you agree or not? We will show up a brief poll, and please mark your feedback in the poll. In the poll, sorry. This also gives you an idea whether you're in the right webinar. So if you haven't voted yet, please vote now before we close the poll. Thank you very much. Let's wait a few seconds for the result. Okay, 82%. This is quite strong. Thank you very much for the results. Let's move to Deya. Deya, where did the idea to build chain feed come from? What was the motivation behind it?
Thank you very much, Jochen. Thank you for all the panelists and for the participants. Good morning, good afternoon, and good evening, wherever you are participating from. This is a very, I would say this is a very close subject to my heart, so thank you for having me in this discussion. I believe the numbers that was presented by Alex, it really answers the questions, because if you look at the 2022 OFAC updates only, you'll see that, and if you want to translate this into daily updates, this is equivalent to an average of 40 alerts on daily basis. And as Alex said, this will not stop here. It will continue to grow. And keeping up with the volume and the frequency and the complexity of this regulation is really, I would say, it dominates the challenges that the compliance industry is facing. Of course, when you look at the industry dynamics and in totality, this challenge also is becoming even harder with all the new trends in the financial industry. Like when you look at the instant payments and the need to give services 24/7 and real time with very strict SLA, where you need to process some payments in seconds and to work 24/7. And on the other hand, keep the balance with the compliance and putting the right controls to prevent any financial crime. So this is really a very complex and delicate balance that the financial institutions has to deal with. We've been working with in this industry for so long, and we have 800 customers across the globe. And I would say that a common dream across all these customers is to have the peace of mind when it comes to being compliant at any point of the day at any point of the time during the day. And that was exactly the purpose behind the idea of chain feed. Chain feed is a tool that works in the back of your screening engine to make sure that the updates on the sanctions are made in timely manner, in real time, in automated way with zero human intervention. And of course, because it uses this emerging technologies, blockchain, it is immutable by design. I remember when we started the ideation phase of this project, it was driven totally by the customer pain, and we have identified 3 pain areas. The first one was the frequency of updates, and thanks to our relationship, close relationship with Dow Jones, we agreed that yes, we will have, instead of having every 6 hours or 4 hours, we'll have hourly updates for this particular project. And this by itself, a huge revolution in the industry of giving sanction updates. The other area we looked at is the courier, how you transport this data from Dow Jones to our end customers who is using this data. And we looked at the traditional way where we are using HTTP connection. We store data in folders on physical script text files that anyone can manipulate. All this was actually risk areas or weak points that we mitigated by replacing the entire journey of the data by a blockchain-enabled platform where it carries the data from Dow Jones and it injects directly to the screening engine. The third area is actually our screening engine as well, to make it ready to consume this data in real time. So with zero downtime, so, because if you want the customer to continuously screening and updates, this is not an easy thing to do. So having our screening engine also ready to consume this data in real time was another area that we have worked on together. And today, once Dow Jones release an update, it immediately carried by the blockchain courier, I would call it, and injected to our screening engine in real time, immutable. As I said, no human intervention, and the authenticity of data is 100% ensured because we are using blockchain or DLT technology, which is by design, by DNA, it is immutable. Of course, when we started this idea, as I said, the whole driver was the pain and the challenge that the customer was facing. But of course, we decided to use blockchain or distributed ledger technology because as an enabler, because by design, by DNA, it provides us with many things that we needed to distribute data and transport data in secure and timely manner. So that was the whole story behind Chain Feed.
Thank you very much, Deya. This is really impressive how you focus on solving the challenges of your clients. Mark, let me come to you. Personally, I'm a big fan of blockchains, but wasn't it possible to implement that idea without using distributed ledger technology? Why was DLT the right choice for it?
Mark, you are muted, I think.
Sorry. Great to be with you, Jochen. Thanks for the question. We certainly don't want to force the use of DLT technologies, unless it really adds value. It is a complex technology, and when we evaluate different projects to determine if DLT is a good fit, we try to look at a few criteria. First, we want to understand if there are multiple participating organizations that are involved in the ecosystem. Then, is there a need for a single source of truth among those organizations? And do we need to apply some kind of validations or other business logic that might involve multiple sign-offs, if you will, multi-signature requirements? And finally, and perhaps most critically, are there potentially significant consequences if there is some kind of an error or fraud, through external hacking or compromised insiders that affects the source of truth data, right? Single source of truth. If it's were to be, modified in some way or something deleted, etc. And contrary, then, is there a benefit from having cryptographic validation available in case of some kind of an audit, right, by regulator or even internally? And so it would seem to me, based on their descriptions, that there is really high stakes in terms of financial sanctions screening these days, right, particularly given the volume that Alex had mentioned. You absolutely would want to ensure that sanctions list updates from any number of regulators are not corrupted or misapplied on their way to the bank screening system, and that banks can actually prove they have applied the latest updates in near real time in a way that's cryptographically verifiable, right, that nothing has fallen through the cracks. I would imagine that incentives for bad actors, to force some kind of mistake or missed update are very significant. We're talking about huge amounts of money potentially. And financial institutions, banks, and others would certainly want to absolutely be able to demonstrate that those updates were applied to the screening system when and where required by the regulators, and that they were applied exactly as provided by those regulators that issued them. So all of that combined certainly suggests that DLT was of great help in this particular solution.
Understood, Mark. Thank you. Deya and Alex, maybe let me ask both of you, what is the regulatory perspective? Were there any recent enforcement cases that have changed the dynamics toward near-time or real-time sanction lists and monitoring? Deya, you said it's now down to 1 hour updates and maybe even moving further. Maybe you want to go first.
Thank you, Jochen. I think this is a very important question because, again, going back to the data statistics shared by Alex, it is very important to say that this is, whatever Alex showed, this is only OFAC updates. There's a lot of regulations that is happening, a lot of regulatory events, applications, that the financial institutions globally have to deal with. So if I want to have a wider look, in 2022, there was more than 61,000 regulatory events to be monitored, coming from 1,370 regulators across 190 countries. So you can imagine how huge is actually the things that people they need to deal with on daily basis. If you want again to translate it into number of alerts on daily basis, it's around 234 events that they need to deal with. Of course, the sanctions has its criticality because it is very time sensitive, and it impacts a very critical operation, which is actually screening payments in real time, which you cannot stop. You cannot just say, I will do it after the fact, so you have to do it in real time. There are some cases that really, you'll be surprised how critical is this subject. I would like to talk about one of the cases that took place in USA. It is with MidFirst Bank. It was funny enough that OFAC released an update, a sanction update after 12:30 p.m. And this bank, they violated this sanction only at 2 p.m., after 2 p.m. So there is a gap of 1 hour and a half between releasing the update and violating the updates. And this is because they don't have a real-time updates or timely manner to do the sanction updates. This case was actually taken as an example and as a teachable, I would say, the screening engine from their vendor has no gaps because they will only pay the price. The vendor will not be responsible. And they actually encourage some of the banks to have a very tough or unserious conversation with their vendors and ask them a direct question. How quickly do you do the updates after OFAC released new designations? And they put kind of also guidelines. If the answer is minutes, you're okay. If the answer is within hours or that same day, that may not be enough to prevent a violation. So OFAC themselves, they are saying it clearly. It has to be minutes from the moment that there's an update in the sanction or new designations till you comply with these new regulations. Another, I would say, enforcement for such regulations. Back in March, the Office of Financial Sanction Implementation in UK, they actually reiterated its guidance for reinforcement of the sanctions. And they, within the guidance, there is a clear warning about the risk of breaking the rules, even if it was through ignorance, no bad intention, but due to not being aware or not being able to do that, again, it is the responsibility of the financial institution. You can see also that this actually responsibility has been extended to reach to the senior management in the financial institutions. So the price will not be paid by the financial institutions alone or by the corporate. Also, the senior managements are responsible. CEOs, compliance officers, and financial risk management officers, they will be held accountable if they do not provide the needed controls, needed technology, needed training to their resources to be able actually to comply with this very challenging, I would say, and fluid sanction regulations. So we can see that the regulators are having almost zero tolerance toward any neglection of timely update for compliance. And with the increasing volume of all this regulation, we cannot really see the classical or traditional technology or traditional way to be able to give the needed controls for the financial institutions. So the answer, yes, the regulators are becoming more and more strict, and there is a straight, clear messages about specifically the timely update for sanction list in the financial institutions.
So if I add this to what Mark said before, it's about killing two birds with one stone, right? So getting both the screening, but also the audit trail right. This is why blockchain technology is used. Alex, what do you think?
So yeah, while I don't have more specific examples like Deya, what I can say is agree with her sentiments. Anecdotally, we're finding that our customers are more and more concerned not just about timeliness, being able to show that timeliness being able to show an audit trail of what they've done to the regulator, to their management, to show what they've done. So it's not just about, are you complying? It's can you demonstrate that you're complying in a timely fashion, being able to demonstrate that balanced risk-based approach that the regulators are looking for. And this tool plays right into that. So with our data, the three pillars that underlie the way that we produce it are sort of accuracy, completeness, and timeliness. And that is all the data in the profiles is correct. That's a big piece. Complete, everything that's within the content definition that we've defined is going to be there. So all the profiles that should be are there, and timeliness, that it's there as quick as humanly possible. Now with anti-money laundering screening, for example, most data providers, and ourselves included, produce a daily update for their content, which is fine. We have a daily delta or a daily update for that data. With our transaction and screening product that Eastnets takes, for example, we were doing up to 3 times a day, so up to 8 hourly. And now with the chain feed product, they've sort of pushed us that little bit further, and we're producing hourly updates. So you're getting to that point where it's almost a steady flow of updates as stuff's occurring, which is exactly what the market seems to be calling for.
Thanks a lot, Alex. Very compelling. Mark, from working with different solution providers and Oracle being a leader in providing blockchain infrastructure and services, do you think chain feed is a good business case for using a blockchain and DLT? Where do you see the uniqueness, and how do you see this technology contributing to the compliance industry overall?
Sure. And so, Oracle has been providing managed blockchain as a service, a cloud service initially, and then later on premises as well, for enterprise and government use cases since about 2018. We have a few hundred customers and literally dozens of ecosystems that have transformed the operations using blockchain. Chain feed, like other applications that need tamper-proof shared ledger in order to ensure validity and accuracy of the data exchange in an ecosystem of multiple organizations, is a very good use case. You would rarely see the use of blockchain whereas there is only a single organization involved. But whenever you have an ecosystem of organizations, or you have a chain of, if you will, supply, whether it's physical products or in this case, supply of data, all of those are very compelling use cases for using blockchain. In the early days when blockchain was all about sort of cryptocurrency, the concepts of permission blockchains weren't recognized so much. But since about 5 years ago, the permission chains focused on a specific set of authorized participants have become accepted across many industries. And compliance, of course, is a strong driver, since regulators prefer to have cryptographically auditable data to sort of wet signatures or spreadsheets that can be manually manipulated and so on. Particularly when there are strong incentives and potentially bad actors in the systems that are trying to get around the compliance requirements, or when there is a significant impact of fraud on, it could be in other areas, other industries such as pharmaceuticals, food safety, critical minerals, health records, and many other things. Chain feed is somewhat of a unique solution, I think, in financial sanctions compliance. But we have also seen DLT being used in banking and financial services for eKYC, know your customer use cases, to share that information with a number of organizations. For trade finance compliance, typically built around secure document exchange. Not every case benefits from using distributed ledger technology, but the broader concept of what we call crypto-secure data management, based on having the data cryptographically secured against tampering or against deletion, that's a pretty strong use case across any number of applications. And so we've actually recently introduced this capability beyond our blockchain platform in Oracle database as well for use of more mainstream applications, which can leverage this fully transparently. So we are seeing strong adoption of these technologies and these mechanisms, and certainly in compliance sensitive industries where regulatory regime like here with sanctions is very strong. I think this is a great use case.
I'm delighted to see all your efforts at Oracle in developing blockchain as a service solution. It definitely makes the technology easier accessible, Mark. Deya, as financial service firms seek to keep pace with regulatory compliance requirements, they are, of course, turning to new and innovative regulatory technology tools like yours to assist them in meeting their obligations in an effective and efficient manner. What are your thoughts on this? How is the technology impacting the future of compliance?
Yeah, thank you, Jochen, and thank you, Mark. Actually, what Mark said is, I will complement whatever Mark said, because he emphasized in several cases where the crypto technology that can play a great, I would say, positive role in enhancing the financial services. What we have to first, if you want to go a few steps back, which is few years back, we can say that financial institutions, they are always ahead in terms of technologies. They are the early adopters to technology, and whatever we call it now today, a legacy system, at the time they started putting it in place, it was a very advanced technology. And of course, the reason behind that is actually that to meet the end user expectation and to serve the needs of their customers. At the end, they want to remain in the competition and not to lose their end users. And this will continue to be the same. Now, in the area of compliance, because of all this technology, new payment solutions, new platforms for financial services, all this actually increase the challenges to stay compliant. If you want to look at the 2022 in terms of cost of compliance, it was projected for 2022, it was projected it reaches $270 billion spent by financial institutions just to stay compliant. And the reason, or the main reasons behind this increase and spending in compliance area is the increased requirements for automation and data usage in order to comply and to respond to the changes in regulations. So, but unfortunately, until today, and despite the billions spent to comply, The financial institution, they only managed to intercept less than 0.1% of illicit funds. So until today, there are like $2 trillion laundered every year, and the fines and penalties are increasing. So this is really very hectic and very heavy, I would say, responsibility on financial institutions. I believe everyone reached to a place where they need to have a more collaborative approach to the way they combat financial crime. And that's why now we hear a lot about the advisory platform, Monetary Advisory Authority, where they want to share information in order to help each other to combat financial crime. And naturally, Jochen, if you want to bring such a platform in place, you cannot do this without an advanced technology where you need, for example, APIs to boost interoperability and exchange of data. You need crypto technologies, as Mark said, to transfer data securely, to have strict, let's say, not only data, documents, information, everything. And it is the best way actually to share information. And of course, the AI adoption also will continue to increase due to the increase of data, the ability of analyzing all this data by the improved computing power. So all this actually it encourages everyone to use technology to enhance the compliance, let's say the compliance controls they put in place. Even regulators now, there are different work papers regarding regulating how to use AI or how to use crypto technologies and all this type of things, because we cannot continue doing what we used to do with all this growing complexity and regulations and in the industry, because it's not only the more advanced the services are become, the financial services, like now with the open banking, the service, the financial service providers, all these people need to comply, and all these people need to be served by the technology to be compliant. And of course, now everyone also talking about open AI, generative AI, and how to apply it internally, at least to increase the efficiency of their operation. But of course, we all have a responsibility towards this, because we have to do our responsible decisions when it comes to technology. We cannot just be obsessed with technology itself without having a clear purpose behind using this technology. Otherwise, it will have eventually a bad negative impact, and it will we might compromise the integrity of the industry itself if we don't use it in the proper way. So the answer is obvious, I think, from all the audience, but we have to be careful what technology, when to use it, and how to use it.
And thanks a lot, Deya, for your views on how the industry will develop. And I'm sure we can expect much more compelling solutions from your company in that sense. Let me include the audience again with a second poll. Are time gaps between regulation issued and sanction list update implementations, as we heard before, a real risk for your institution? Do you agree or not? Let's give our audience some seconds to respond. And also, let me remind our audience to add your question to the question box if you haven't done it yet. We will wait a few more seconds. So let's see for the feedback. Yes, 71% agree. So all three of you, you're addressing the right challenge, obviously. back to you, and maybe for a question for all three of you at the same time. Are there examples of financial institutions implementing solutions like this, and how have they benefited? Who wants to start?
I can probably start off on that one. So
Please.
I think it's fairly, this solution is still fairly unique, as Mark said. It's quite a new tool, but from our perspective, I think Deya stole my buzzword because she mentioned complexity at the end of her piece. And I don't know anybody in their professional lives who could do without a little less complexity. I think we'd all like things to be simpler. And if you think about the way that we currently work today, your company buys the data, you have to search, you have to define the criteria and which feeds and which lists you want to track. Then you need to set up the infrastructure to pull that data across, hardware at your end, servers, firewall access, admins to schedule the data feed, pull and updates, regular refreshes. Those are lots of steps, lots of potential for error, for feeds missed, if there's a problem with the download, getting complete tools. From my simple and selfish perspective, a blockchain in my world, that makes good sense. So I think that's anything that takes links out of the chain, potential for failure or opportunities for things to go wrong is a good thing, and this seems to be exactly that. It solves multiple problems.
Yeah, Mark, who wants to add anything?
Yeah, I mean, I would agree certainly, with Alex that in terms of sanction screening, this is somewhat unique, at least from what I've seen. But we have seen financial institutions, banks, adopt solutions that similarly foster the flow of data and shared single source of truth data kind of in, similar areas around payments, around, applications involving trade finance, supply chain financing, things of that sort. eKYC in terms of onboarding new customers and sharing that data. There's been, a number of projects that we have participated in. For example, there's been some eKYC projects done in Europe by some of our partners, Middle East as well. We have seen trade finance, particularly in Asia Pacific, with document exchange solutions being deployed, and a number of other things that really, lend themselves from a perspective of enterprise blockchain towards creating this more manageable and more autonomous ecosystem data sharing, right? We've all kind of used the traditional, financial systems, financial ERPs, core banking systems, helping to automate within a particular organization, right? And making sure that the procedures are properly implemented and all the steps are followed. And you see a lot of that certainly in banks and other companies. But they've been lacking somewhat when it comes to ecosystems of multiple organizations. That's been less automated. And now I think combining the benefits that the blockchain provides, smart contracts and the like, there is an ability to create greater automation across the ecosystems and brings that on a par with the same kind of capabilities that are available within a particular organization.
Yeah.
Yeah, if I may add, actually, I'll be talking about the impact of chain feed itself when we implemented it to our customers. Because today, as we speak, we have implemented the chain feed services to more than 30 customers of our screening customers. If I want you to see the impact and how this changed the entire, I would say, operational. First of all, we as a service provider, we have also customers in our data center where we manage their screening engine. So we used to have our updates to be done overnight, and there should be an engineer that will follow up and make sure that everything was done perfectly on the timely manner. So that was the first thing we did in our data center and in our service bureau customers, we completely eliminate the manual updates and we replace it with the chain feed. And that was actually, it gives us first, us as a vendor, because we are responsible as well. It gives us the peace of mind that our customers are receiving the sanction updates on daily and in security manner. If I want to look at different cases of our customers, I remember one of our customers used to, they have different operation in different countries. They have a global spread that they operate 20 hours a day. And usually when they want to do update for the screening, they need to do it after working hour because it impacts they want to make sure everything is going right. They want to check it manually. So they challenging. Today, we connected all these 20 branches all together on chain feed, and they get the same updates all together at the same moment. Another customers, they have distributed implementation. So every organization is a standalone organization, and they do the updates. But the bigger challenge for them was the asynchronous, not having a synchronized data, because everyone do the updates based on the time zone that they are in. So, and this actually created conflicts on decisions. So imagine even the same organization, they used to have conflicts on, is this sanction, a sanction? Yeah, I updated 2 hours before, I need to update 2 hours after. So also this was eliminated. So this is from an operational point of view. Now from a compliance and audit point of view, blockchain by itself, because chain feed is based on blockchain, the distributed ledger, it gives us the opportunity, it gives us the feature where every transaction is time-stamped. So it can be easily tracked, and you can go to any period of time and prove to the auditor or to the regulator that you've been compliant at that period of time. And of course, even the customer at any time, they can do the consistency check between what they have in their engine as screening engine and what is stored in the blockchain and our chain feed. And from our side, lucky enough, we can do the consistency check with Dow Jones. So at any point of time, we can check our blockchain, the distributed ledger that we have with what Dow Jones have their list. So there's a double consistency check that makes sure that the data is correct, complete, and nothing is missed. One of the customers, because of the connection, they lost the connection for the updates for Delta. And because they do the fullest updates only once every month, so they lost the Delta for a whole month because the system will not do the Delta update again. And all this has been eliminated because of all these controls that we put in place. So imagine the amount of, I would say, the hassle, the worries, and all these kind of concerns about having the proper sanctions in your screening engine. So I believe, again, using chain feed, the DLT was the right decision in terms of giving us the peace of mind that this is immutable, no one can manipulate it, and it is traceable, auditable, and you can keep it as long as you want, and you can refer to it the way you want, as auditor, as regulator, or as a financial institution.
Yeah, please allow me a brief follow-up question. Before, you also mentioned artificial intelligence and large language models and so on. Do they also play a role in other applications you offer?
This is a question to me, Jochen?
Yeah.
Yeah, of course. As I said, we always assess the right technology to add a new value to our customer and to solve a problem that the customer or a challenge that the customer is facing. If you look at AI, we have different application and different usage for AI across all our services. We operate at the two spaces of payments. in all type of payments and in the space of compliance and financial risk management. In fraud, it was one of the most beneficial tool or technology is the AI, where you can predict and the behaviors, you can create patterns about the behaviors of the customer, and any deviation from the usual behavior you can detect as suspicious behavior. We have also the AI applied across screening and AML to reduce false positives, so to enhance the automation. So the more you reduce false positive, the more you will be able to actually enable automation and make a seamless operation. Even in the payments space, we also use AI to analyze all the information, and the fact that we store every single piece of data about the payments and the user, the transaction, it really gives us the power to use this data in different ways. So the customer can really use it for report, data visual relationship. So all this together is actually in place, and we are using it in our solutions.
This is amazing. Thank you very much. After discussing among ourselves, it's high time to look at the question of our audience. I have a question here. What is your opinion? What, in your opinion, is the most effective way to keep up with all the huge numbers of new regulations targeting financial institutions? So not only sanction updates, but regulation overall. I don't know who has an opinion on this. Alex, maybe you?
Yeah, that's a tricky one. I think it's a common challenge. I think the way that so it's a common challenge. So I'll try and answer the question before I start talking about the way that Dow Jones does it. I think everybody is struggling with this massive updates. I think there's a number of different sources that provide access to updates on a regular basis, but definitely you need to have a compliance team that's paying attention, that's across all of that. Or you're paying, an outside consultant to manage this for you. The way we address this at Dow Jones is that we put our sanctions lists in territories. So OFAC, there are many lists in OFAC. OFAC put out 29 lists, I think. The European Union, they never retire lists. They create a new one. So there's 240 different lists in that space. What we do is place them in reference group. So you've got an entire regulator covered. So if you take OFAC, you get all the relevant lists. And when one's suspended or a new one is added, that automatically gets added to the feed that we provide. So there's low danger that somebody might miss an individual list or be screening a list unnecessarily that's been suspended. So it's not a perfect answer, I'm afraid, but I can tell you that's how we cover this, by just providing territory coverage that covers all the lists from a particular jurisdiction and includes them so that the customer doesn't have to worry about that.
Okay, thank you very much. I have another question. This is maybe for Mark or Deya. Can you give an example of a use case for using distributed ledger technology for watch list updates? Anyone wants to comment on this? Watch list updates, DLT?
I'm not sure I understand the question, because this is chain feed, actually. The example of updating watch list updates.
Yeah.
Can you repeat the question, please?
Yeah, can you give an example of a use case for using distributed ledger technology for watch list updates? Okay, whatever.
Watch list updates,
right? Chain feed. Yeah. I mean, I don't know if there are different types of watch lists, but chain feed certainly, is a great example there.
Yeah.
Now, there may be other kind of watch.
Yeah, there are other kinds. If you want to talk about all the lists that were like the PEPs, the adverse media, the dual-use goods, the sanctions, everything. Of course, all these lists can be uploaded and can be, let's say, automated through blockchain, like chain feed. When we started with Dow Jones, we took a risk-based approach, and this is very important when it comes to regulations. You have really to identify the higher risk area and start working on that. And this is, and because of the nature and the time sensitivity for watch lists, that was the reason behind, for sanctions in specific. That's why we started with sanctions, but this can be applied also across all type of lists. But when you look at the frequency of updates and the amount of updates, and even the customers, the way they're doing the updates for PEPs, it is not in real time. They do the screening offline and the updates offline. So the risk behind having it in the same manner like we do it in chain feed is not really huge. But of course, managing all this together through chain feed, through blockchain like chain feed, it will be of an added value to customers, so they have it all through one source.
Okay, thank you very much. I have another tricky question. What is the cost of this tool?
You can contact the sales team in Eastnets. Because here I don't like I think me and Alex, we don't like such a question, even Mark, because people should understand the value and the impact of this tool first before talking about the commercial side of it. Yeah.
Well, and I think just practically, like, how many lists do you want to screen? How many names? How much?
Yeah, of course.
All of those details change have impact on the price and the complexity of the sale. So it's not an evasive answer. It's just that we can't give an accurate answer without more detail.
But I'm sure you can take this offline based on the data. Whoever asks a question, please get in contact with Deya.
Yeah.
One final question here on my list, but still happy to take more. Where does we talked already about AI, right? Where does AI fit into the future of sanction screening, in your opinion?
Oh, you already touched base on the. Go ahead first, Alex, please.
No, I think it sounds like you had an answer for in your head. I was going to start deferring to Mark because he's that technical space, but I think AI it's everywhere, isn't it? Like we're talking about it all the time. And specifically, what type of AI are we talking about? Are we talking about machine learning? Are we talking about natural language processing? Or are we talking about, your chat GPT iterative AI? And I think there's different answers depending on where you're going with that. I think we're seeing that the former two everywhere in solutions now, and they're making tools faster, more accurate, and better. It doesn't make them, like, having a really powerful tool, having a good woodworking tool doesn't make me an excellent carpenter. My wife would attest to that. But it can, if you're still paying attention, you can still get great results with that solution. The chat solutions, the chat GPT kind of tools, I think, there's change coming to every aspect of industry. It's what shape that takes, I think we're yet to see. But
no, that's true. I think the more recent stuff that we've seen is the generative AI, where you're actually generating strings of text and all of that. That's somewhat unique, I think, obviously for natural language interactions. But we have seen, and in fact, Oracle has been implemented machine learning technologies for a number of years now in a couple different ways. One that's most obvious probably are things like anomaly detection. When you have significant amounts of data, you can apply techniques that can determine deviations from sort of expected or normal or behavior over the past historical time frame, and detect those kind of anomalies in behavior. So you can start detecting perhaps specific kinds of payments that maybe violate certain restrictions or regimes, whether it's money laundering or other things, by applying those machine learning tools to the vast pools of data. The second area that we have seen internally, in many of our systems, there is significant amount of operational, decision making that needs to happen, and significant staff required to operate the IT systems. Whereas by applying the machine learning technologies, we can automate a lot of those things and have the systems manage themselves. It's what at Oracle we refer to as autonomous, right? We have been over the last couple of years, at least, talking about autonomous database, where it is self-managing, it secures itself, it manages itself. Many other Oracle technologies are moving towards incorporating machine learning internally so that we can automate a lot of the processes involved in day-to-day management of those systems and, reduce the reliance on, difficult to, get an expensive IT staff, or, have them focus more on the application value and spend less time managing the systems, letting the systems kind of, be managed by the machine learning AI technologies under the covers.
If I may add to that also, because the question was about the screening. If we take an example of trade transactions and the fact that trade transaction has a lot of complexity and attached to it in terms of documentation, bill of lading, the MT700 series transactions, and all these together. Having the capability of contextualizing the information and put it in the right context is very important. And AI is really, I would say, it is not nice to have in this area. It is mandatory to have, because otherwise you'll not be able to understand and compile all this source of information, which is actually free text that you need to understand and link things together. So in some cases, AI become the answer to the problem rather than nice to have as to enhance the solution. In some areas, in our, if I want to talk about our experience, we have AI capabilities that does a lot of things pre the filtering, pre the screening, so you can reduce the pressure on the engine. Then post filter, what else you can do based on that, and then the second level is to make the machine learn to take decisions on behalf of the compliance team. Of course, here comes the complexity of explainability, which is always the question when it comes to a regulated industry. Can you explain, can you justify the decision that was taken by the machine? Is it clear to us? Is there a good answer to that? And that's why, again, this is something that we need really to pay attention to, and to have the proper tools to visualize these decisions and why it was taken at the first place. So the application of AI is unlimited. And as Mark said, this is not only on the product side, on the operational side also. There's a lot of things that the organizations are taking into consideration. And we are, as a company, we're doing this to increase the efficiency in some places in the company and in the operation, rather than the only products. So the sky is the limit, but again, when it comes to AI, responsible decisions from us and everyone, the regulator, the banks, it is after a while of using such technologies.
We don't have any further questions. Let's wrap up our exciting discussion, if you don't mind. We have heard about the changing landscape of sanctions regulations, an avalanche of new sanctions coming in. Alex, you have shown this. We have seen the need for new technology tools, the advantages of blockchain and distributed ledger technology. Thanks, Mark, for explaining this. And also we have seen Eastnets chain feed as an efficient solution for this challenge. Please join me, unfortunately, only a virtual round of applause for all three of you for your insights. Okay, at least my clapping hopefully heard. For the audience, please note that further information and a recording of this webinar will be sent to you by email. And finally, thank you very much, and I wish you a pleasant afternoon, evening, wherever you are. Thanks a lot.
Thank you. Thank you very much.
Yes, thank you.
Bye. Bye, everyone. Thank you.